I'm Douglas Mason, CEO of Naturally Splendid, symbol NSP on the TSX Venture Exchange. Naturally Splendid is a biotechnology and consumer products company focused on the global cannabis and health markets. Naturally Splendid is expanding distribution in this rapidly growing market with products currently in Canada, the USA, South Korea, Germany, and Australia. To view our comprehensive company presentation and for more information, please visit our website at naturallysplendid.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Ted Dixon, CEO and co-founder of InkResearch.ca. He invented the Inc. Canadian Insider Index, which is used by the Horizons Canadian Insider Index ETF, a 2017 and 2018 Fund Data Fund Grade A Plus award winner. His website, CanadianInsider.com. Welcome back to the show, Ted.
Well, thanks for having me back, Jim.
Ted, anybody hitting panic buttons after the Dow lost 800 points on Wednesday?
Well, in terms of insiders, no. There's certainly not a lot of panic going on amongst insiders, but what is probably equally concerning to us is that there's not a lot of buying either, and we've come off the blackout periods for a lot of companies. They've done their reporting, which means that usually around the reporting period when they're reporting their quarterly earnings, insiders are typically not allowed to trade in the bigger companies, where earnings really matter. If you're a junior mining company, well, then it's drill results that matter, not so much the quarterly earnings. But in the U.S., you really have to kind of wait a little bit after quarterly earnings are done before, if you're an insider, you can trade. And we don't see a big rush to buy the dip here. Okay, so that's a little concerning, but is there panic selling? No. And one of the indicators that we look at in the U.S. is the behavior of insiders in the industrial sector. And we were really near a sell signal 2 weeks ago, and basically what we wrote out to clients was that if our indicators in that sector gets below 20%, both our short-term and our longer-term indicator, at 20%, there's only one stock with key insider buying for every 5 with selling, so that's pretty low. If it gets below that, it typically has signaled the stock market weakness, and you probably want to kind of take some money off the table. However, it didn't give that signal. It pulled back, and so we're not quite there yet. So to answer your question, no panic, but not a lot of conviction to buy the dip here outside of the energy sector, where insiders have come back in and started to buy, particularly in the United States. We've seen some, for long-term contrarians who are, willing to take the risk of this, the longer-term secular risks with the oil patch, with the move towards alternatives, for those contrarians that are, believe that it's way overdone, and, there's certainly a lot of stocks out there that are generating cash, and I've written about a few of them in the last week or so, about, that have good dividend yields, and unless oil prices completely collapse, should be able to sustain those yields. Yeah, there's an opportunity there, but you have to be able to really have some conviction behind being in that sector, and the risks of that go along with it. So that's the only area where we really see a lot of decent insider buying in the U.S. and in Canada. There hasn't been a panic. It's been multiple years of insider kind of buying here. The long-term Canadian dip, I guess as we can call it now. It's it's been a pretty bleak few years for the Canadian market. Hasn't really done too much. So the behavior of insiders is no panic, but certainly there's we're not getting a lot of screaming buy signals either. So it's I guess I would categorize it, Jim, as we're in hurry up and wait and see mode.
Are people thinking, oh, this is just a minor correction, or this will be like December, January, where we had a 20% correction and then it was all hands on deck again?
At this point, I don't know. I think that there's so many uncertainties out there that, if that could be resolved quickly. If China and the U.S. really decided that they were going to get a trade deal, that would help. It wouldn't solve all the problems, right? But it would help. So, there are some developments that could be positive, but what are the chances of those? And what is the probability that we are going to get a trade deal? I wouldn't put it very high myself, but look, the world's full of surprises, and maybe we'll get one. But I expect that we're in for a period of malaise here for some time, and yet could you get a surprise on the upside? Sure. Could you get a collapse on the downside? I hope not, but that's possible. But looking at it right now, you're really looking at stock picking, individual themes. That's really the way to go. Broad. I would even say, broad sector ETF exposure is probably not the way to go. If anything, if you're going to use ETFs, you want to use it to hedge on the downside. And you just have to look at sort of what's been going on in the marijuana space to see examples of that. We've put out a couple of videos for free for people on CanadianInsider.com in the marijuana space, where we've looked at some big names where we warned on the downside that there were gloomier days ahead, cloudier days ahead, and we also found one on the upside that's done quite well. So, stock picking in that space is critical right now, as we've seen over the last little while. So, and I think that holds for just about across the board. It's a great time for active managers to prove themselves in this market, because I think just sort of buying the index here, you look at that as of yesterday, the S&P 500, which everyone's been touting as the great go-to market in the world. Well, it was flat for the year. Reminds me of the Canadian experience for the last few years. So that's kind of, I think, where we're headed. We're really headed for a stock pickers, individual name market for the foreseeable future, and so it's a great time to start, exploring individual stock names, and it's a good time for individual stock research, and I think back to sort of fundamentals are really going to matter here at the company level.
We'll have more with Ted Dixon right after this.
Cypress Development Corp is developing a world-class lithium resource in the heart of Clayton Valley, Nevada. The size of the resource makes the Clayton Valley project a premier asset with the potential to impact the future of lithium supply. Cypress Development Corp trades on the TSX Venture Exchange, symbol CYP, the OTCQB, symbol CYDVF, and on Frankfurt, symbol C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Welcome back. We're speaking with Ted Dixon. Ted, China's just put out a statement saying it would like to meet the U.S. halfway in their trade talks. Does that give you any optimism? A little compromise on both sides.
No, it doesn't give me any optimism. Having witnessed the ongoing drama around the U.S., Mexico, Canada trade agreement, which I believe is still not finalized in terms of every government finally signing off on it, I will believe in the trade deal when I see it. And I think that there's been a lot of analysts, a lot of fund managers who've gone on mainstream television to assure everyone there's going to be a deal. It's in everyone's interest to have a deal. And I've heard many analysts essentially say that tariffs are a nothing burger. They don't matter. They're just small. Well, I think all of that has been proven so far incorrect. There is no deal. There is no prospect of a meaningful deal anytime soon. So that's one cloud that's going to hang over the market. That's going to keep the market from having any meaningful move on the upside because of the uncertainty. And for the school of thought that says, well, it doesn't matter, these tariffs, well, you just have to give your, think a little bit about global supply chains here and how people who operate those are thinking. And when you don't know whether you're going to be allowed to trade with a particular country this year or next year, it's uncertainty, and uncertainty is not good for business. There used to be that show, Laugh-In, back in the 70s, that they had this line saying, war is good for business. Well, I don't know about that, but I can tell you, Jim, uncertainty is not good for business, and we've got plenty of that right now.
If you're taking a look at investing in gold, do you invest in gold bullion, major gold miners, junior gold miners? What do you look at?
Well, we're not gold sector specialists, so and precious metal specialists. So I would restrict kind of my answer to where we are in the mining space with the stocks. And we've had a nice run here. Generally, we see good insider sentiment in the space. There's not a lot of alarm bells on that. However, we have had a nice move. So, a lot of that is behind us. And we're starting to see at the company level some behavior that I think people have to be mindful of, a risk that may cap kind of the upside here in the short term. And that is financing risk. And, an example of that was New Gold, which reported their results at the beginning of August, and they weren't that great in terms of the market reception. But what happened was then shortly thereafter, they announced a bought deal financing. The stock, subsequently fell 10%. It's the bought deal financing was for $150 million. It's $1.60. The stock's, fell below that. It closed today at $1.55. So the market's like, well, not very happy with that development. And why would that be? Well, just less than a month before, the company put out a news release saying that they had maintained a liquidity position of $400 million, which supports their short-term operational plan. Well, I guess short-term, by management's definition, was only a week or two, because less than a month later, they've done a bought deal. So, and I'm singling out New Gold only because it's one of the most recent, but you're starting to see more and more. So you're going to see more. New Gold will not be the last. We put out a piece on CanadianInsider.com the other day. People can take a look at about Eldorado Gold, which ranks very high in our rankings. It's had a nice run here. But they put a shelf prospectus offering filing out there. It's a preliminary one. So that doesn't mean they're going to do a financing. It doesn't mean that's going to happen right away, or if it happens at all. I mean, it just gives them the option to do a financing over the 25-month period. However, you're starting to see more and more signs like this of managements getting ready to pull the trigger to do a financing with this run-up in gold. The first leg, I would call this sort of the first leg of the bull market. So something that may kind of restrain it here is this risk of financings amongst many different companies. So, those investors who hold gold shares, they really want to take a good look at the liquidity positions of their firms and, phone them up and say, what's your view on your financing requirements? Try and push them. You won't get much beyond what's already in the public domain, but, it's important that those investors with gold mining shares, realize that there's, I think, a certain attitude right now among some companies that now is a good time to do financing. Because so many of these managements have been used to years and years of being in the wilderness here. Now they have investment bankers calling them saying, "Would you like to do financing?" Well, I can assure you, all those investment bankers were calling marijuana companies, up until just recently, and the mining space, was pretty lonely. I don't know how many times their CEOs and CFOs at mining companies had their phone ringing from different investment bankers saying, "Would you like to do a bought deal financing?" So those phones are starting to ring more often now, and some managements will just not be able to resist the allure of getting some money in the kitty, even if it means diluting existing shareholders. So we'll have to see, and we'll certainly be taking a look at New Gold. It still ranks very high on our ranking system, our quantitative ranking system. That's not a recommendation for the stock at these prices by any stretch. Our rankings are not stock recommendations, but we'll be interested to see how if management buys into the financing and how much. Management's owns a fair amount of stock in the company, so it'll be interesting to see if they maintain their commitment in terms of their equity ownership. So it'll be a good case study to watch, New Gold. But I'm afraid there's going to be a few other ones that we'll be could possibly talk about in the next few weeks. So keep your eyes open for that. Financing risk at this point could be a bit of a restraint on the bull market in gold shares right now.
We'll have more with Ted Dixon right after this.
Grand Portage Resources' Herbert Gold Project in southeast Alaska highlights increased gold resource, indicated and inferred, of 860,000 ounces, in excess of 10 grams per ton gold. Expansion drilling is planned on the Herbert Gold property for the summer of 2019. Grand Portage Resources trading symbols are GPG on the TSX Venture, GPTRF on the OTCQB, and GPB on Frankfurt. For more information, please visit our website, grandportage.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Ted Dixon. Ted, if you're unsure what to do right now on what way the markets are going to go, is there any embarrassment in just taking it out in cash?
Absolutely not. And there's no harm in having some powder dry, and in fact, on a risk-reward basis, there's a good case to be made for having some cash. So, it's always good to have some liquidity, and at this point, unless you're a deep contrarian in the oil patch, I mean, that's the only kind of area of the market right now that has that sort of allure that, well, prices are so beat up because some of the valuations in there are just absolutely mind-blowing at how cheap they are. Doesn't mean they can't get cheaper, you see. So that's the risk the contrarians and the value investors take. That it could be a long time before things turn around and you get an uptick in the crude oil price. And so, we're watching crude very closely, not only to confirm that maybe we're at the worst point in the oil patch, but it also provides a window on the outlook for global growth, and we need to see global growth surprise on the upside to jolt the Canadian market out of its doldrums, and it'd be good for the broad market generally. So, yeah, aside from the oil patch, there's just not a big case to be made, broadly speaking, to buy the dip at this point. And so having some cash in case that moment comes, and there is a chance that we could see a move to the downside, but also because stock picking now is going to be so important, you want to have some cash to find those opportunities that when you come across them to move. And if you don't have any cash, then, and a good opportunity does arise, say the market overreacts to a bad quarter or whatever, some bad news comes out and the company gets hit and is overdone, if you don't have any cash, then you have to sell something that you do like. So it's always good to have a little bit of liquidity to take advantage of opportunity, especially in this market environment right now, where I think the risk of having sort of broad momentum sweep the S&P 500 to way beyond its all-time highs again within the next couple of weeks. Well, anything's possible, Jim. Maybe in 2 weeks when we come back, we'll be at new nosebleed highs in the U.S. stock market, but I would assign a very low probability to that.
Ted, thank you so much for chatting with us.
Well, thanks for having me back, Jim.
My guest has been Ted Dixon, CEO and co-founder of InkResearch.ca. His website, CanadianInsider.com. If you have any questions for Ted or any of our other guests, you can send them to info@HowStreet.com. Our Twitter handle is @HowStreet. Our popular YouTube channel is Talk Digital Network. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.